Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Jake Clopton, who is a commercial loan expert and president of Clopton Capital. Jake, welcome to the program.
Thanks so much for having me on, Mike. Appreciate it.
Hey, so I've got a lot of clients that are in financial services, whether it is financial planning and or even real estate agents. So I know commercial properties are really, really big, and I don't think you can just go Google best commercial loan, click submit, and here's my pre-approval in 20 seconds. So I know that there's a lot that goes into commercial lending. So I'm excited to learn from you, but give us a little bit of your background and your entrepreneurial journey up to this point in your career.
I think what you said is right there. So my background really, I guess starts back around like early or mid 2000, right? So I actually traded interbank hedging product futures, so like 3-month LIBOR and Fed funds and stuff like that before I started this company. And I got out of that business around the 2008-9-ish era, which we all know what happened then, right?
The big crash.
So interest rates went to zero, right, as financial crisis, and you kind of need volatility to make money when you're trading. So I was kind of looking for something else to do, right? And my idea, since it was a financial crisis and nobody's lending, was to really start an intermediary type company, a broker that helps people find capital for various deals. And at the time when I first started, it wasn't 100% focused on commercial real estate, but very quickly, just got kind of drawn to that angle. I like real estate, and, I'm interested in it. And, just something that as opposed to like other types of businesses, that we could be arranging capital for, I was just drawn to the commercial real estate side. Almost 14 years later, here we are. We're still at it, and we're continuing year over year to have our best years.
That's awesome. I was in residential lending at that time, and like you said, it just disappeared, dried up, and went away. I went the route of let's go back and do an MBA in marketing, and then I got into consulting. So people have to pivot, bob, and weave, and no matter what you do, you've got to find that, carve that niche out in your market, and you not just be another commercial lender, because those are, as this saying goes, a dime a dozen. So what do you do to stand out from your competition? And like what you just said is we've achieved year over year, improvements consistently. Well, how do you do that? Because you can't just go, yay, we did this thing, we had a great year, and let's coast. You've got to do some things to remain competitive. What do you find works for you?
That's right. And the stuff that we do, to kind of differentiate, right? kind of going to the business in general, like we have built out a huge network of lenders, and we're sure to be competitive on that side, right? And we do a lot of outreach. But I think the areas, candidly, where we remain differentiated, right, is by, a lot of our industry is trying to go the direction that, let's say, the residential industry went, right, where they're trying to create these rocket mortgage type of deals or guarantee, right? It's something that's basically an automated lending platform, and it doesn't really work that well in commercial, right? Everything residential is very boxy, right? You get a house, there's another house, and you plug in a couple things, right? It's very easy. The loan programs are grids and all that stuff. There's a couple things like that are in commercial, but for the most part, every property is different, right? But kind of the trend is you have a lot of people trying to come into the industry and do that, right? But realistically, what are they trying to do, right? They're not trying to deliver the best, I would say, customer service or satisfaction to anybody that's using the business. They're trying to minimize the amount of time that they actually spend dealing with anybody, right? So that's the whole point. So a lot of the, and that's what a lot of this, you hear technology driven and automation and all that stuff. And that's all fantastic. But I would say 80% of the businesses I see that are trying to push that angle are really just trying to push the work onto their customers and try to, lower their own expenses and stuff like that. I candidly don't think that's a great example. And you kind of look at, how residential went, right? I mean, yes, there's a rocket mortgage, yes, there's guaranteed rate, all that stuff, but there's still a lot of individual mortgage brokers that get things done because they haven't commoditized themselves, right?
Because they're developing relationships with their
right, clients. Exactly. And there's most certainly, something to be said about, not pushing the work off on your customer and still kind of charging them the exact same amount, candidly, at the end of the day. So, that's what we're not trying to do, right? So actually I'm going the other direction, right? I'm trying to put myself out there more. We're trying to build better relationships. I'm not trying to push work onto people, and tell them that we're, technology driven in some way just because we've utilized an Excel spreadsheet or something like that, right? I mean, that's not the direction we're going. So, that's kind of I would say that's the largest kind of theme we're operating on today, which may be, contradictory to what a lot of other people are trying to do out there, but it seems to be working out well for us.
Well, you can take that same description that you just laid out and overlay it on many industries, and you can see how, like in financial services, well, we don't treat you like a number, we treat you like a private client, the private client group, and we're going to meet with you one-on-one. And I think that when you can do that, now people, especially in commercial real estate, there are so many nuances of finding a deal, closing a deal, understanding what could happen, and hurdles and roadblocks, that they need a trusted source to guide them through that. So not having just some wide net gathering leads and saying click here to get pre-approved, that to me makes total sense. And so what I would wonder is, what do you guys do to really create and deepen that relationship so that you're developing that know, like, and trust with your clients?
Right. So, I mean, developing trust is, it's kind of an abstract concept, right? I mean, there's a lot that obviously goes into it. We try to remain experts in our field, right? And kind of position ourselves as an authority in what we do, versus, again, just going back to just basically being a website or a platform, right? And kind of going back to that, we definitely take a more, I would say hand-in-hand approach to kind of the way we do our business, where, and obviously, like, this, not every business is like ours, right? But we're an intermediary between capital sources and borrowers. So whenever somebody interacts with somebody in our company, whoever they're interacting with has knowledge on both sides of the table, right? For, let's call it the money supply and then the money demand, to kind of marry those two different sides. So there's no, like, wall of communication between one side and the other. And I do think a lot of businesses, even financial services folks, do kind of get that, wall a little bit there, where, let's say you're in wealth management and you have, you're basically kind of you're at some platform, you basically get handed, right, the portfolio you're kind of supposed to bring clients into, and didn't really have a plan, a hand in picking the individual stocks. I mean, that would kind of be, the what we're trying to avoid. I guess that's the, one analogy to another, financial services type of industry. But, and like I said, it just goes, hand in hand with, again, having more face time and working with the people more, and not trying to push work onto them that, used to be work that, people in our position would do. So,
yeah. I think that's one of my favorite books that I've read in many, many years is Building a Story Brand by Donald Miller. Have you ever read that one?
I haven't, no.
It's really, really good. I recommend it. But one of the teaching points in there is we should not be the hero to our target audience, our customers, our clients. We need to be the guide. They're the hero. We need to guide them through the process because of our expertise in the industry. So as we're describing that, it's like, yeah, come to us. We've got the knowledge and expertise. We're going to guide you through, from finding a property to financing it and to even doing projects. Kind of makes me think, what is your main focus? Like in residential, you've got, buyers, sellers, residential, property management. Do you guys in commercial financing, do you have a specific type of investor that you tend to deliver great results for?
Yeah, I mean, our guys are typically either private individuals that have commercial real estate as investments, or like small to middle market kind of real estate companies. I mean, we're in the small middle market space, right? So that's kind of the way I put it, right? And middle market might be over $100 million now. I don't know what the way things have been going, but generally we don't deal with institutional type of clients and stuff like that. I mean, it's mainly some private investor or high net worth guy or a small middle market real estate company.
Yep. And then what kind of projects are you working on? When someone comes to you and says, Jake, let's do this deal, what are you working on with them and for them?
It tends to change over time. So generally speaking, we've been doing this for 14 years. I've done a little bit of everything, right? From apartments, office, retail, industrial, self-storage, hotels, we'll do construction, bridge, perm loans. But our kind of strategy here, right, is, I like to follow the macro trends of what's going on and then kind of pivot our attention towards those routes, right? I mean, I don't want to just choose one thing and say, hey, this is what we do. And then, if there's some sort of downturn in exactly what we do, just beat my head against the wall until it starts working again, right? Yeah. So a good example of this is during COVID and the lockdowns, right? I mean, hotels weren't working very well at the time. Let's just say that, right? And we traditionally done a lot of hotels. So one thing, that was kind of my decision is pivoting into something that was working very, very well at the time, which was residential construction, like building subdivisions and homes, stuff like that. We really hadn't done a lot of that in the past. But what I did quickly was, because, I have the experience to be able to do this, build out the capital source network very quickly to be able to service, residential for sale home construction, and then quickly targeted those people like, home builders. And, the first, let's say, quarter and a half of the year was not so great. But once we pivoted into that, we actually ended up having one of our best years ever. So, and that's a thing. So, what we do and what I'm doing at any one time kind of depends on what's going on in the economy, because, obviously, commercial real estate kind of follows that. And we'll pivot into what's working well.
Yep. We have to. I mean, for people listening to this going, oh, well, that just means you're following shiny objects. Nope. It just means you're following the market and you're maximizing and capitalizing on what's happening and what's going on. And we're well versed in any of these, but here's right now what's hot. Let's do this. And I think that's really admirable. On your LinkedIn profile, you talk about JV equity. That makes me think of strategic alliances. So talk a little bit about what kind of JV equity partnerships that you guys work with.
Yeah, so there's a couple different forms of equity out there, right? And the stuff that we don't do is anything that looks like real estate securities, like private investments, stuff like that. So anything that you need a broker dealer to do, right? So what we do is we arrange real partnerships between people. Whereas let's say you've got some guy and he's building an apartment building and he's looking for a joint venture partner, right? Somebody's going to have a say in it, even if they're in an LP position and they're going to bring, a big chunk of the equity. That's the type of stuff we'll bring to the table. And I mean, for anybody who doesn't really know this space, let's say potentially, right, it's like a $20 million apartment building deal, right? And you can go up to 80%. Loan to cost and a construction loan. So you have that 20% that you need equity for, right? The joint venture partner could potentially come in with 90% of that 20%. And the general partner, basically, the guy who's the face of the deal, is really only coming in with 10% of only the equity. So you can see how, you can, even though the sponsor themselves may be coming in with a smaller portion, right, comparative to the deal, they can get a big deal done by, getting a joint venture partnership and leveraging equity even further. And the way the returns work, right, so the general partners or the sponsor would by far have the greatest, returns compared to their investment. And then the LPs, right, the joint venture guys would have, a high equity return. And then obviously the debt's below that. So.
And it's all risk-based because obviously the one putting the deal together has more risk, so you're going to get more return. But because you guys are, kind of structuring things, you're able to give little, almost like a little, I don't know, a crowdfunding kind of a concept because you're bringing in a limited number of people. You're not, allowing thousands of people to come in and get one little sliver of the deal, but you being able to say, here's this deal and here's this piece of it you can take advantage of at this rate of return, and then everyone participates. And that's neat. I like when you can have enough resources and connections and network that you can put that together.
Yeah. It's interesting. I mean, to go even further, the limited partner that we bring in is usually just one source. So it's like one source that'll do the whole chunk. And that's one of the selling points for people dealing with joint venture partners, right? It's like, hey, I've got just one partner now. Reporting's a lot easier. We're going to go to one guy. He's going to do all the equity, and away we go.
Yeah, rather than answering to or having so many people that brings in so many moving pieces.
There you go.
Yeah, very good.
Correct.
Yeah, that makes total sense. And again, kind of having your, golden Rolodex, as it were, to be able to pull deals together. And I'll bet you that you've had in the past a deal that had a kink in the works and a fire come up and it's like, ooh, I know this guy, I'm going to be able to bring this in and let's fix it. And, that kind of comes full circle into what we were talking about at the beginning of our call here, which is relationships. And you're not going to get that type of thing with what we're mentioning here with fill out this form and get pre-approved online, and now you're just another number. When you have developed a relationship network, you can do a lot of good with that.
That's right. I mean, the thing is when you automate something, right? And if you've ever built out anything that was automated, the way it works is it works with very defined guidelines, right? And you can think about it like a lot of these automation things, and people say AI, this and that. I mean, it's really kind of run, kind of like on a glorified spreadsheet, candidly. And it needs guidelines, right? It needs boxes, it needs columns, it needs specific criteria where you basically the deal is going to go in, it's going to kind of shuffle through, whatever process you made and spit out the other end, basically by just getting refined down into like what, the potential lenders, would their criteria are. The problem with that is, and I'll tell you from my own experience, having the relationships with lenders and having a good relationship with them, I'm able to get them to do things that they otherwise wouldn't, right? So if you were just to go to them, say, give me your lending box, right? I mean, and it's XYZ and that's it. That's all we do. The real answer is something other than that, right? That they'd be able or are willing to do. And 90% of, our industry, and I feel like most industries, is really just presentation and having the relationship to get them to listen to you in the first place. And you're just not going to get that, right, with some automated platform.
So you have developed, and now again, bringing that R word back in here as we wrap up here, is you develop relationships with some of these lending sources where it's not just, oh, we're going to send your package in for approval. Oh, sorry, it didn't get approved. Here's Jake going, you know what? I know how to put this together. I know how to present it well. I know how to put the cover letter. I know how to talk to the underwriting department. I know how to pitch this deal so that it is the spectacular deal that it is. Whereas someone else comes in and they don't get the full picture. You have relationships and you've got the experience to know how to make a deal work.
I think that's exactly right. And I mean, we go the extra step further to not only understand, right, what the borrowers are after, but you got to understand the lending side too.
Yeah.
And realistically, the lending side is really just an investment company, and understanding, how much of a return that they need to return to their company is a huge benefit when you're going to pitch deals to them, right? Because then where they can move, what they can do, different areas, and where they can be flexible. And that's kind of the benefit of what the relationship brings. Absolutely.
Yes. Well, I think that actually should be one of your most important competitive advantages that is talked about all the time, because boy, you can just get everything packaged up just fine and then get that red X stamp on there saying denied or whatever that looks like in commercial. So knowing how to have the relationships, knowing how to structure deals, knowing how to get them through, that's worth its weight in gold. So I think that is spectacular. So if anyone listening to this is interested in going, Jake, what can you do for me? I've got an idea for a project, or I need financing, or anything like that. What's the best way they can reach out and connect with you?
LinkedIn's great. I'm all over LinkedIn. I'm very easy to find. Or our website, cloptoncapital.com. This is all I do, so feel free to give us a call anytime, and I'm happy to chat about deals.
Awesome. Well, Jake, thanks so much for coming on today. It was a real pleasure to have you on the show.
Absolutely. Thank you.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.